having a protection come saving component also in it. So this is for the whole life of the person. At end, somehow the nominee or the beneficiary is ensured of the amount which has been invested. If at all, as there is a saving component also in this plan, if at all in between, if insured person wants to have some cash flow, we have to withdraw or have to take a loan against the policy, then he can go ahead. And mainly this whole life insurance is like the premium will be even till you die, like till the age of the person. So if at all a person taking a product at the age of 40, the premium might be little higher when compared to the premium taken at the age of 20 or 30. So but the premium will be little bit higher when compared to term plan. Next is endowment product, and here it is a combination of against saving and income protection. In this plan, actually there is a maturity benefit also given in endowment plan. If at all you are taking a with profit policy, then you will be eligible to participate in the company bonus also at the time of maturity. So here the maturity amount will be sum assured plus bonus. And in case if any uncertainty happen, then the sum assured will be paid to the nominee. So simple as it is, but you can participate in the bonus of the company, this endowment plan. And money black plan is nothing, it is similar to endowment plan, but in this there will be a part of some percentage of sum assured will be paid to the insured at a regular interval to meet their cash liquidity needs. After a certain period or like 4 or 5 years, a percentage of sum assured will be given to the insured. So till he lives. So at the end of the plan, if the person survives, then they will pay only deducting all these no regular interval payment. They will pay the remaining amount at the end of, like, if the person is not living, if he is dying before the term, then total sum insured whatever he has taken will be paid. Then next, coming to ULIP product, it is a unit linked insurance protection plan. See, in this, there is a combination of investment and savings. Yeah. So here, the amount which you invest, a certain percentage will be invested in the market, and it is like they will get it from you, like whether we need to invest in the equity or debt. So the customer will decide on the fund which it need to be invested. So in this, if the market goes well and the investment returns are going high, then definitely the return on this policy will be much higher than comparing to all the plan. So the maturity will be the face value of the fund which is having at the end of the term, and if at all that's in case of that, then it will be a sum assured. That will be a benefit. So yeah, so these are the type of products which is being available now, and each company names it in a different product name. So now, yeah, coming to these are all the plan which is we have. And only another thing, like another plan which you need to cover importantly is in retirement plan. So retirement planning is something which need to be done now. See, there will be various income sources for retirement. Like you might get a rent from a property, or you might get some returns in the equity shares which you have invested, or interest from FD, or you can get it from pension or some that social security scheme, bond coupon, etc. But all these income which you get is a variable one. See, the property, the rent which you get from a property as a retirement income is a very good option, but still you should find a proper tenant, like who will continue for a long period. If at all is not continuing, then it is difficult for you at the old age to find a new one, and you have to maintain that property properly. But if at all there is a property, it needs some maintenance, and tax, property tax need to be paid. And these equity and which has been invested in the market will definitely have some fluctuation. It depends upon how the market perform. And even FD, the same way, the interest might not be the same, sometimes it might fluctuate. And coming to the coupon bonds, everything, so all the income which we get from these income sources have a variable component. But here in annuity policy, there is no fluctuation. The amount which is being given at the end during retirement will be fixed one. So at least you will have some fixed earning through this. So when the retirement planning comes, then it has to be a combination of all these two component in this, like variable income plus fixed income, so that it will be easy to run a smooth retirement life after this. So this is the main thing which I need to just inform you about the retirement income sources. Then coming to next, yeah. So just I want to tell you, so this is the type of products and other thing which has been available in insurance sector. Coming to departments in insurance, just wanted to share with you, like once you lock in the policy, what is happening to that product? It undergoes a various stages actually, before the completion. So if you see first, once you log in the policy, it will go to new business team, wherein they will just feed your data in the system and then pass it on to the underwriting team, where there is a person called sitting underwriter. So he will just assess your policy based on a various information which you have given in there, like your age, medical history, family history, personal history. So each and every answer which you have given will have a point there. So he will evaluate based on all of this, and he can take a three decision on your policy, whether he will accept, if at all it is a standard life coming under the under his risk taking capacity, he will accept your policy, or he might reject your policy if the risk is too high and they cannot accept. Or otherwise he can ask you to go for a medical checkup if at all he feels that your medical history is little high risk is there, in the medical condition, then he will ask you to undergo for medical, or he might charge you a little extra premium to cover that risk. So these three things happen during the underwriting stage. Then it goes to no other policy document team, and those who just print and issue a document to you. And there are other services, no department, like claims, customer service, compliance, then grievance cell. Grievance cell is mainly to if address any compliance or any any grievance of for the policy holder. There is a separate cell, you can just contact and inform them. And customer service department will help you to know your fund value or any queries if you want to renew, or any customer service related function, they will help you. And claims is the main department, where it require a speedy action, because already the person will be in that no pressure of financial loss and loss of family member or financial loss. So it is a department where once you submit the claim, they will assess your claim form, and if at all any investigation required, they will conduct the investigation. Then they will see how fast they can settle your claims. So there is a risk management team, and yeah, there is actuarial department, in which this premium no, which you are getting at the product, and the premium, everything is being designed by actuary. They will make a lot of mathematical statistical analysis, looking into the past data, past risk, and the claim history. So they will arrive at a value called premium. So he's the person who decides the premium of the product. Yeah. And also the marketing team, this is a major backbone of any sector, because this is a team which uh, takes the product to the end customer, okay, making it to get the business. So these are the various department functioning in an insurance company. And yeah, so now actually I have covered a life insurance scheme. Coming to non-life, like general and health insurance, there are, as I told, fire, burglary, and marine insurance, theft insurance. There are lots of insurance, when coming to vehicle insurance, in coming to non-life sector. And health insurance, actually, it is now a very fast growing sector now, because due to this pandemic, like due to this deadly virus is coming in, now it is having a very good you know, business. So this is very important for every individual, because the raising cost of medical expenses and raising hospitalization charges. So this is a very basic product like term insurance for each and every individual. Yeah. So next, coming to challenges. See, actually, this term insurance is really required if at all a person is having any financial dependency, like a nominee, like wife or children or parents. If they have a person depending upon them financially, then it is a must plan. But the option of buying a second product might be depending upon the need and amount, like premium payment capacity. So all these factor comes to existence when you buy a second product, like benefits which you get from the product. So it has to be understood, the purpose of taking a second policy to be understood before getting a policy, a second policy of insurance. So what are the challenges which the insurer face during this condition? See, actually, there are lots of queries which are flooding into the company due to this COVID-19 situation, and they have been addressing it well. And to just share with you a few queries which we receive in the sector, the first one is like the customers are very much worried whether their policy covers for this COVID condition. Okay, so whether it covers or not, that it is clearly mentioned that your current active health insurance policy will cover for this COVID treatment. And coming to how much cover will be provided, it all depends upon the policy which you have taken. It is similar to other ailments, how much cover you have taken, and it should be like, I think all policy will have post hospitalization and pre hospitalization expenses to be covered, so that will be covered. And all your x-ray or ambulance charges, covid test charges, all these charges will be covered under a plan which you already have. Okay, so other than this, there are few other queries also, like whether they can take a policy now. Yeah, definitely. Anybody can take a policy now, health insurance policy, but they should make sure that they are not suffering from this ailment at present. Okay, so if at all you're suffering from the ailment, then it is different. But if you don't, you should no submit a proof that you are not suffering any ailment as of now. Then you can take a normal health insurance policy, which includes all the ailment, which will cover after a certain waiting period each company have after 30 days or 90 days, and the cover will start. Okay, so you can take a policy now also. And one more thing, the IRDA. So IRDA is a regulator for insurance business, and it just protects interest of policyholder, and it gives license to agents or intermediaries. And apart from this, they give the certificate of registration to all the companies. So there are lots of functions. So according to, like, now IRDA has directed the companies no for bringing out a new product, like disease specific product for this type of diseases. Like they have to come with a product which is specifically designed for to cover a particular disease. So now few of the companies like ICICI Lombard, Star Health, and few companies have come up with a disease specific plan, wherein it is only covered for a specific disease like COVID. So once the person takes up the policy, I think on the waiting period has been like 15 days or something. Now they have reduced for this policy, and once he has taken and survived the waiting period, if at all he suffer from the disease mentioned, like a specified disease, then the cover will be granted. The sum assured will be released. In case if they test positive, and if at all just they have asked to quarantine themselves in some medical center, then I think 50% of the sum assured they are giving them. So these are the various queries, health insurance queries, which are flooding in. And other thing, one more good news that IRD has given to their policy holder is that they can pay the premium from March to May 30th in the next installment. That after May, after this lockdown lifted, there is no lapse of the policy will happen. The policy is not going to lapse. 1 minute. So it is not going to lapse. So these are the various this queries which comes to insurer when coming to the health insurance sector. So now there are few challenges which the company faces, like insurance companies faces, are lowering of their business volumes and decreasing of their return of investment due to this adverse market movements. So they are facing some difficulty in the return of their investment and this business continuity plan challenge. But somehow all the insurance company has been already digitalized, and now you can take up a policy online, renew a policy online, or all the service request has been made online, and you can submit the claim also. through digital platform, but still somehow this discontinuity plan challenge exists, and this return of due to fluctuation in return of investment, this problem still like they are facing some problem adverse. But yeah, comparing to other financial sector, this insurance company faces a little the risk is little low when compared to other sector. So now coming to now we will just coming to the final this thing. Insurance sector is a colossal one, and it is growing at a 15 to 20% together with banking services. So this insurance services act to 7% of India's GDP, and a well-developed and evolved insurance sector is a boon to economic and infrastructure development, same time strengthening the risk-taking ability of the country. So this is a thing which I want to share for insurance sector. Now coming to banking services, see, banking has a history originated in 18th century. I'll just brief you a history of banking also. See, actually, first bank which has been emerged is Bank of Hindustan. The first bank in India commenced on 1770, and it ceased its operation on 1832. So the oldest bank still in existence is SBI, which is known as Imperial Bank of India before. And in 1935, RBI was formed, and later it has also been nationalized in 1949. And if you see the functions, like what RBI does, they control the monetary policy, and they are a banker to the government, and they regulate all the banking no services of the industry. So now now in 1969 the Indian government decided to nationalize 14 banks, and the second phase of nationalization happened on 1980. Another six banks have been nationalized during 1980. This nationalization happened just because to avoid the monopoly of the banks, because they were holding a major share in the country. So to just avoid the monopoly and increase the penetration to the large masses, they have decided to nationalize the banks. But even after nationalization, a large portion of masses is untouched by banks. So in 1991, the bank sector also allowed to enter private player, and some of the huge private players till now are like HDFC, ICICI, Axis Bank, and IDBI. So just they have entered to touch the rural sector of the country, to touch the large number. So this is a brief history of banking. And yeah, now coming to understanding what is banking and how does it work. See, banking, we all know it is a financial institution, where it accepts the deposits, and it lends the money to the borrower. So accepting deposits and lending the money and making a profit, this is the banking meaning, like banking does. But see, actually there are few savers who has excess money, and they wanted to put this money somewhere. And there were a few person, like there were borrowers who wanted to have some money to meet their life requirements, like buying a home or buying a vehicle. So what happens in between this bank, what happens, they get the excess amount from the saver, and they will pay a small rate of interest to them, and they are lending a portion of this deposit to the borrower in a rate of interest which is higher to the interest which they give it to the customer. So here the difference between both the interest is the amount which the bank earns. So this is a profit. But there are other ways also which bank makes money, like they lend at a larger rate than at the rate of borrower. So, and also for charging fee for services which they get, they earn money, and also they invest in financial markets. Okay, so these are the ways the bank earn money. So this is how it works. And now coming to the types of banks, it is majorly classified as scheduled and non-scheduled bank. Yeah, scheduled bank is nothing but the name of the bank will be listed in the second schedule of RBI Act. So most of the commercial banks in India are a scheduled bank, and some 3 to 4 non-scheduled banks are there. But most of the banks in India are scheduled banks. So in the types of scheduled bank at present in India are, yeah, public sector banks, private sector banks, foreign banks, RRBs, and then NBFC. So coming to this, see, public sector banks are the banks which is having a 50% of the share, more than 50% of the share will be with the government. And I think currently, after all the merger happened last year, now the public sector bank counting to 12, and private sector bank are the major shareholding will be with the individual. So I think around 24 private sector banks are there now. And coming to foreign banks, I think foreign banks are around 46, and rural regional banks are around 53. And mainly these rural regional banks have been established to concentrate the rural areas of India to serve them. But they do have a bank in city, urban city also. And next is like an NBFC. NBFC is, it's not a type of bank. It is actually a non-banking financial company. It is also registered under Companies Act. And mainly this non-banking financial company focuses on lending activities. So they earn through lending activities. And they were involved in many business like insurance, chip business, infrastructure. So many business they do only the lending thing. They cannot accept deposit, or they cannot give a check. So these are non-banking financial institutions. Now coming to functions. So what are banking functions? It has been categorized as primary and secondary function. The main primary function of any bank is accepting deposits and granting loans and advances, right? So coming to the deposits, there are various deposits available like saving deposit, FD, current account, and recurring deposit. So saving deposits nothing but a salaried person, a common man or student can deposit a smaller amount or bigger amount in n number of time, no n number of time or whatever the amount may be. So they can just deposit and get a little minimum rate of interest on it. That's all. There is no loan available on this saving account. So this is simple, no saving account works. And coming to current account is mainly given to companies. So the current account is being given to businessmen, and there is high liquidity, and there is no restriction on number of times they deposit or number of time they withdraw, because business people will be doing a transaction often. So there won't be any restriction on that. And but they you can't take any there should be a minimum balance to be maintained for the current account, otherwise they'll have some charges. And nowadays I think actually no, the current account will not have any interest. But nowadays, however, the banks due to competition, I think nominal interest they give nowadays, few banks. So current deposit, against this you can get OD and no, or loan from against the current deposits. And coming to recurring deposit, yeah, recurring deposit is similar to FD. FD is where yeah, FD, I didn't explain FD. So FD is where you can deposit a lump sum amount for a fixed term for a fixed interest. So yeah, if you have a lump sum amount and if you want to put it and earn little bit higher interest compared to all other deposits, then it is better you can go to the fixed deposit, and you can get loan against the fixed deposit also. But if at all any premature withdrawal, if you want to withdraw the money on certain circumstances, a few banks charge a lower penalty, and a few bank doesn't charge a premature withdrawal. So FDs are good if the person is having lump sum amount and want to earn little bit higher interest. Recurring deposit is something similar to FD, but you can put a smaller amount on regular interval. Okay, recurring in this, like you can invest 1,000 rupees on 1 month, or some 5,000 rupees on other month. It might be monthly or half yearly or quarterly. You can just deposit, and at the end, see, it's like a droplet becoming an ocean. If you keep investing some smaller amount, at the end it will be, without even you knowing it, it will become a larger sum at the end. And the interest rate will be similar to fixed deposit only. And this recurring deposit is mainly to promote discipline and saving of the investor. So these are the various kinds of deposit available now. I think fixed deposit now the minimum is 7 days, and it will be I think 10 years is the maximum period in FD now. So yeah, the coming to the next function, granting of loans and advances. The bank advances loan to business community and other members of the public. and the rate charged is higher than what it pays on deposits. The difference, yeah, as I told, the difference in interest rate, the lending rate and deposit rate is its profit. So types of loans which are advances which the bank gives are overdraft, cash credit, discounting of bills, and then loans. Here the overdraft is given to a current account holder, wherein he can withdraw amount more than what he has in the account. Like if he's having some 50,000, he can withdraw some 60,000, and how much ever the money utilized on that, the interest will be charged. So I think this is for mainly for current account holder. And cash credit is something, it is being given to all, like current account holder or like a normal people, there will be a separate account. This is like cash credit, giving a liquid cash to the borrower at a certain rate of interest against some collateral security. You need to provide some collateral security, and I think the interest rate will be little no lesser when compared to overdraft. So I think overdraft, the interest rate is little less when compared to cash credit. Interest rate will be little higher. So mainly this cash credit is given to business people who will require some time to realize his profits. Once the raw material is ready and it goes to the consumer, it takes some time in between. So he will have some time to earn his profit. So during that time to have the cash liquidity, the liquidity of cash, like they are issuing this cash credit to business people. Coming to discounting of bills, yeah, discounting of bill is something like, see, if I am a drawer and someone is want to pay a bill to me and they have paid it, but the bill is post dated. If in case of emergency, I need to go and I need some money, then I can go walk into the bank and discount this bill with them, and I can get my money with some charges. And later, they will recover from the drawee on that particular day. So these are the lending type, which like loans and advances that bank gives. Next, coming to loan section, yeah, there are a few types of loans, like secured loan, unsecured loan. Okay, what is secured loan? Secured loan is something you are giving a amount with some security with it, like home loan, loan against insurance policy, FD, mutual fund, etc. So in this type of loans, the rate of interest will be little less when compared to unsecured loans. So unsecured loans are something like personal loan, education loan, then business loan, vehicle loan, etc. So these are the type of loan where the bank considers CIBIL score also. It is a score, it has been given by TransUnion CIBIL IO, considering the financial discipline, the transaction which the person does. So considering various factor, each individual will have a CIBIL score, and based on the CIBIL the credit reliability, they will issue this loan. I think above 700 score will be a good score to get a loan easier. Coming to, yeah, see, in education loan, the loan repayment starts after the moratorium period of 1 year, like after the student studies his education, it starts. And coming to agricultural loan and Kisan credit card. See, actually now all the banks have started targeting the rural sector also, so they have started issuing agricultural loan at very nominal rate of interest, and this is mainly for purchasing of land or for farming and irrigation activity or purchasing of some big equipment. Okay, so cattle feed or livestock. So for all these type of requirement, they've started issuing agricultural loan for farmers. And this Kisan credit card is something which the government is giving for short term to meet the daily operational need of the farmer, like sowing of seeds or purchasing of seeds, irrigation. So small no day-to-day activity has to be carried out. For that, he need not go to some unorganized lender, no, which will offer at a very higher rate of interest. So the government is giving this facility to all the farmer. And in this card, I think they have some insurance policy also covered. So this is regarding to agricultural loan and Kisan credit card. And yeah, so other facilities does the bank, yeah, I didn't mention the secondary functions. So I have just covered the primary functions of bank. The secondary functions are like agency services and utility function. This is simply agency services is like transfer of your funds, no, and then collecting of check. No, the activity with the bank does on behalf of you. So all these comes under the agency services. And then utility function is like a locker facility and social security schemes from the government. So all these like ATM, these are the utility function which they are providing. So these are other service facilities which they give. Debit card, yeah, credit card. They give loan against a credit card also, and ATM, internet banking and mobile banking. Yeah, now the like banks have also, no, technologically developed them much, and now through this internet banking and mobile banking, you need not go to the bank manually to open an any FD or to open a saving account or to get your interest certificate. You can get the interest certificate and you can pay your amount through online. So yeah, they have also digitalized far better, and that they are able to survive in this pandemic. And still, it required technological improvement is needed in this hard much to run the business without any hindrance. So yeah, bank also offers some third party products like insurance, mutual fund, bonds, and golds. I'm sorry, it's gold. So insurance, yeah, see, insurance company, they have a tie up with the bank, and the bank will sell their product for some commission basis. See, as banks are spread over a country in large number, it is easy to access the public. So they have a tie-up called bank insurance and bank assurance. Through this, the insurance is being sold through banks for some commission. Similar way, the mutual fund, bonds, and golds. So they get a tie-up with the bank, and bank serves as an agency for mutual fund and all that. And they, on basis of some commission, they run. So this is also one of the income for the bank, and it is a mutual benefit for both the sector. So these are the third party products which the banks sell. And now coming to, yeah, what are all the now impact and challenges the sector faces during this condition? Yeah, the like insurance sector, the business interruption, and all those common issues which has been faced in banking sector also, like curtailed business activities due to like I think hour they work, and national lockdown curtail business activities, job losses, pay cut, unemployment rate spike will spike like as per according to this CMI monetary no of Indian economy. This is some monetary this thing of Indian economy. This is CMI. As per them, the unemployment rate will spike up. So RBI has announced now. Yeah, one of the other news which RBI has announced is 6 month moratorium. I think it has been extended till August now on all term loans, credit card EMIs, credit card payments. So for all the dues falling between March till August, and in this during this time, if the person is really not able to pay, they can utilize this and they can pay later. So considering this impact, it is a big relief for home loan borrowers and other people, those who suffer that they were not able to run their business. They could not function due to this. They are no it is a big relief for them. But for the bank, there will be a fresh asset quality issue emerge if they are not receiving, recovering the payment in next few months. So an actual picture of loan default will emerge only after the lockdown is lifted. In this actually moratorium period, what happens is the interest gets accrued and it will be added to your principal and the term of the loan will be extended. So if you're not paying for these 2 or 3 months, if someone taking the option, then the interest will get accrued and added to your loan amount. Then the term, the period will be extended for another 2 or 3, like 20 or 2 months or 20 or 3 months or 4 months, whichever period which you are breaking from that. So this is one of the facility, like one of the relief which the bank has announced. And another is yeah, another point like repo rate cuts. Yeah, it is strong message to bank also, the same this thing to be passed on to the customer. They have cut the repo rate no, I think by 4% now. So it is a good message to the banks. And with the customer. So now, yeah, now again, one more thing that government has announced as a relief package. It has directed banks to lend for MSME as per the government decision of relief activity. In this scheme, all the eligible MSME borrower will get an offer from their lending